I'm Corbett Wall with DV Auction, here with your feeder flash for Tuesday, July the 28th. Happy birthday to my middle daughter, Aspen. Brought to you in part by the nationalbeefwire.com, which is the place to go for everything you need to know about cattle. All your cattle markets, all your cattle products, a lot of your purebred genetic sites. There's a jillion channels on there that can tie you into just about anything that you might want to know or be interested in with cattle. This report is on there every day. It's the easiest way to find this report. Real-time feeder cattle market information as fast as you can refresh it. Just everything you need to know, and check it out, nationalbeefwire.com. Neutral reports don't jive. The reports were neutral. The cattle on feed report to come out Friday and the biannual inventory report that come out, they were both neutral as far as what your experts thought that the information would be on there, but things just aren't jiving, and I think it's starting to throw a red flag out. It definitely hurt the board on Monday. Of course, all your ag products were down hard on Monday, so we're not sure if that's it, but I talked about it a little bit on the last visit, but wanted to look into it a little bit more because it stirred quite a bit of interest, and I had a lot of comments. A lot of people commented both on Facebook and on YouTube and on our websites, and sent me messages, and let's just look at that. You know, your placements are the cattle that are put on feed in your bigger feedlots, 1,000 head or more. And if you look at the placements the last 5 months, not for the reports, but for the month that the placements were made, things just aren't jiving. So February placements, that was really at the very early stages of the COVID. February placements were 92% of a year ago. March were 77%. April 78%, which those are unheard of. I mean, wouldn't happen unless we were in a pandemic. May was 99%, and finally June, which we just got the results of, was 102. If you average those out, that's 89.5% placements of a year ago. Well, the inventory report in January told us that we had more cattle than we did a year ago to move through the system. But our placements are less than 90% of what they were. That doesn't make any sense. So where are those cattle? So you know, the only thing that does jive is if the placements were down that much for the last 5 months, maybe that's why we're not seeing the big backup in cattle that we thought we would expect, because we're behind on our slaughter for the year. So we're behind about 6% on our slaughter, which would be somewhere between 850 and 900,000 cattle. Where are those at? Supposedly the northern plains, Nebraska, and definitely Iowa are current, but there's cattle in the southern plains that are supposedly backed up. But last couple of weeks they've been hauling plenty of those from places like southern Kansas into Nebraska to have them slaughtered, so we should be catching up on that. And we did hear our big corporates that are in the formula contracts really squealing about big cattle, and we've had guys sending heavy cattle up to some of the fed cattle auctions up in the northern plains, but not that much, and it's kind of backed off here of late. So are we out of the problem? You know, some people are saying we're out of the problem. I still think the cattle have to be there, because if you look at the weights, our weights are still over 30 pounds bigger, our carcass weights, average steer carcass weights, than they were a year ago. So why are the weights so big if we've got the cattle cleaned up pretty well? Things just aren't jiving. And so let's say that we are down cattle that should have either been placed or maybe should be on feed, but somewhere we've had this big disappearance of cattle. Where did the cattle go? Well, a lot of people are saying, hey, more cattle went to some of those little custom kills and those mom and pop meat shops than you think. Well, I believe that could be part of it, and it definitely is. You know, you can't get a kill slot for anything. I don't know what's going to happen here in a couple of months when we get into deer season, because I really doubt a lot of those little kill plants are going to shut down, being backed up on their cattle and hogs, that they can sell a lot of that retail and make a lot more money, shut that down to be processing deer for a little to nothing when nobody's really that wild about the meat. But those guys are shut down. But some of those, and the ones that can indeed sell retail, with the exception of the few states that made it legal for them to sell that retail just under state inspection, and that wasn't very many states, most of those are federally inspected, so they would have been counted. But a little bit makes a difference, and I don't care who you talk to, whether it's in the southeast or the great northwest, up in the northern plains, definitely down here in the southern plains, I can attest to that. You cannot get a kill slot anywhere. And so, and I've heard of people from the southeast, let's say, that had cattle on feed out in the 5 areas that they were having trouble getting them marketed. And when they sent the next batch of feeder cattle, they said, hey, throw me 20 head of those biggest fats on, I'll get them taken care of out here. Maybe enough of that has gone on to where we have kind of cleaned up our backlog of cattle that may or may not be out there. Another thing, what several people suggested, and I don't doubt that, is maybe it was the winter of 2019. You guys remember that. The losses were big time. The losses of calves being born. Those were the cattle that were being born. And a lot of cow losses out there, but ended up sloughing a lot of calves, dropped a lot of calves in the flood waters and things like that. But we never did see much of that pan out on our inventory reports. We never saw that. The inventory report to come out in January said that we had more cattle to deal with, that we were prepared to work through the system this year. Finally, this mid-year report that we just had on Friday come out and said that we are going to have a smaller calf crop here for 2020, which we knew that. Most of us figured we had a smaller calf crop the last time, but they didn't find that. They didn't estimate that. And I said that on the last visit, and I can't stress enough. All these reports USDA puts out are estimates, and how they calculate them. How many of you guys fill out those questionnaires and send them in? How many of you do it honestly? How many of you think too much about it? How many of you don't fool with any of that stuff at all? I was with the USDA long enough and putting out reports that I know the difference between official and right. And there's not a hell of a lot of difference between it. It's official if you get it out on time and you got the right letterhead on there. And you approve it from USDA. Whether it's right or not, who knows? But I tell you what, the only thing you can trust as far as USDA reporting is the number of head slaughtered every day, because that is logged. And we do a good job estimating that, because we've had so much experience of trying to estimate that when the actuals come out a couple weeks later, we're not very far from it, although we've been overestimating our slaughter getting back from the COVID, because we have to keep cranking it back down a little bit. But everything else is just a big estimate, and I tell you what, we're really up in the air about it, and I think some of the investors in this futures deal are starting to see that too, as you saw them kind of back off of the futures on Monday. Let's look at that board on Monday. August live cattle futures down 90 cents at $100.42. October down 127 at 103.82. You go on out from there on your live cattle futures, down $1.25 to up 75 cents, and the only one that was up was your farthest out traded month, which is December of 21. August feeder cattle down 270 at 139.35. We've been kind of expecting these feeder cattle futures to go down, but they've just been ganging and ganging and ganging, and going up and up and up, and then trading at a big premium to what your index levels are, your cash index levels. But we've sold cattle so well, yearling feeder cattle, the last week or two, that our index levels were just about to catch up, and now they're not too far apart here. Actually, your August feeder cattle fell below CME Cash Feeder Cattle Index, the latest available. So we've kind of seen a flip-flop there on your basis on feeder cattle. September down 312 at 139.62. Going out from there, and your out fronts on feeder cattle were down 212 to up 30 cents. Your weighted average on last week's fed cattle trade in your 5-area feeding region, 100,000 head, compared to 81,000 the previous week and 72,700 the same week a year ago. Live steers and heifers sold from 92 to 102. Big spread there. It was mostly 95 to 98. Your weighted average on live steers was 97.24. That was up 88 cents compared to the previous week. Dress sales, 156.61. Mostly 157 to 158.5, and your weighted average on dress steers was 158.10, up just 54 cents. But if you look at that, you know, I'd a heck of a lot rather sell my cattle dressed than I would live if you're looking at those weighted averages there. But most all your dress cattle sell in the northern plains, which they're much tighter, and so that's really a premium to the southern plains that's still kind of backlogged with some of these heavy cattle that we can't figure out how many there are of. But you see that I've been telling you that they've been buying cattle in southern Kansas and shipping them all the way to Nebraska for slaughter. Your packers would rather pay $3, $4, $5 freight than they would raise the market a buck or two. Those are the kinds of things that we're fighting here, trying to get fair markets and competitive markets on your cash side, because they don't want to up the market a buck or two and then have that affect all those formula sales out there. They would rather pay a little extra freight and kind of get the supplies where they need them. But nationwide, 113,300 head sold cash. And notice I don't say negotiated cash because there's not a hell of a lot of negotiating going on. But 10.2% of those for the 2 to 4 week delivery out front, which is not bad at all. We've gotten completely back to normal as far as all that goes. Negotiated grid sales were 26,800 head. That's how NCBA and them think we're going to solve this inequities in our balance of cash trade versus what your packers are getting on their wholesale beef is bid the grid. I don't know if we could get them to do more negotiated grid, why wouldn't they do it anyway? I don't think your packers are thinking too much about that bid the grid. I do think that they're worried about having to fulfill minimum negotiated cash trade, or that's because that's why they're buying so many more cattle cash now, but they're not wanting to give more money for them. They're just a take it or leave it price, not a negotiated price, to try to get people to back off of the cash. But if we could mandate minimum negotiated cash within each major facility, they would have to scramble around, guys, trying to find cash cattle to fulfill their quota on that, which would be a percentage of what their slaughter is, and I think or what their weekly purchase is. Excuse me, but I think that's sure the way to do it. They gave us the blueprint and the instructions on how to do it on that initial investigative report from USDA. I think we should follow that. I think we should pressure Pat Roberts, the Senate Ag Committee chairman, to have a hearing and a vote on that. I think Chuck Grassley's got the votes to get it to go on further. We've also got the legislation in the House. We need to get something done, guys. It's pretty bad when USDA puts out a report, and they're not supposed to make a stance one way or the other, but they put out a report saying, you know, we can't necessarily find for sure, we can't accuse and prosecute these packers for this, but if you guys aren't happy with what's going on, change it. Here's the ways to do it. Use mandatory price reporting to enforce it and monitor it. Come on, pull your head out of your ass and help yourself. But the guys that are taking most of the dollars that you guys give are using the bucks against you. And that's why I think there's so much push behind the referendum vote that we got up right now. But you got to do something. Christ. But look at formula sales this past week, near 300,000. Negotiated grid that they say is going to save the world, 26,800 head. and then cash sales nationwide 113,000. But that's kind of how the rubber meets the road as far as that. Talk about our corn. I tell you, it's not worth anything, and that's one reason that these middleweight feeders are bringing so much. You look at the latest report on how the crop's coming along as far as silking. We're 31 points ahead, percentage points ahead of last year, and 7 percentage points ahead of the 5-year average there. So corn crop is really coming along great here. Most of the ethanol plants are shuttered. We got to find a place to go with this corn. Most farmer feeders are thinking that's going to be in a room in somewhere to put that corn to try to get any more value out of it, and I don't know where else it would go. But let's talk about your feeder cattle market. Your real-time index, 138.95, down just 14 cents. Your trends were down some, but your real-time index only down 14 cents compared to the end of last week. That's not bad at all. Oklahoma City, the Oklahoma National Stockyards, 7,500 head. Feeder cattle, $1 to $4 lower. Also $1 to $4 lower on calves. It had been sharply higher week after week after week, about due to come down a little bit in Oklahoma City. They also made note that the offering was mostly plain. Joplin Regional Stockyards, 4,900 head there. Market on calves and yearlings, mostly steady, with as much as $2 higher, especially on the middleweight cattle. And those are the ones that lead to most grain. Those are the ones that have the biggest push on them. You see one individual quote out of Joplin, 125 head of 977 pound steers bring 126.85. Don't forget the video royale with Superior Livestock's going on. It is out in Winnemucca, but if it's no better than it was in Reno when I was out there a couple of weeks ago, not a whole lot of fun. Also, they're going to have the yearlings on Tuesday here, so be sure and tune in if you want to see those sell. They're likely going to come off the tops just because of the timing there. But Fredonia Livestock, Fredonia, Kansas, they've got a big special. A lot of fall-born weaned calves are going to be on that, and then some more cleanup deals on their load lots of green grass yearlings there. But talked about Joplin, selling some of those big cattle weighing nearly 1,000, almost to 127. That's just the freight away from the big string. In Sioux Falls Regional Livestock, 469 head, 993 pound steers, 131.50. But for the top quote, I got to talk about Elgin livestock sales. Talked to my friend Ted Baum there Monday evening, and he was just about to go find something to cut that dust in his throat. Had a big day there at Elgin at the sale barn. Talked about him going to be there, and they had a big long string come from the King brothers there, backgrounded cattle there, but a moderate flesh is what Ted told me. But look at the heifers. 564 head of 870 pound on the average heifers bring 127.35. The way they do it in most places out there is they weigh up those loads and let the buyers buy them as long as they want them. And they sold those at 127.35, and the guy cleaned the plate. That's your feeder flash for Tuesday.